every seller's dream to put their house on the market and have not one, not two, but multiple buyers come and make an offer on that house. Definitely one of those things that you like to brag about at the cocktail party. But when you're in the thick of it, that could be a pretty stressful situation. How do you evaluate these offers? Today, we're going to talk about some tips and tricks to help you organize this information, the offer information, and really make the best decision for you. Hi, I'm SandiWarner with Warner Realty Group, and today we're going to talk about how a seller can organize and think about a multiple offer situation and pick the offer that's going to be the best for you. When you get multiple offers, many agents will break them down for you for me, if you've watched any of my videos, you know I'm a spreadsheet girl. I like spreadsheets. I like being able to look at data next to each other. When we do a multiple offer scenario for a seller, we will, as an agency, ask all the offers to be in X date. So say, you've been showing the house on a weekend and we say, hey, everybody get all your offers in on Tuesday. We're not going to go in on this video on whether you're doing a highest and best. A multiple offer situation does not necessarily mean you have to go to a highest and best situation. You can receive multiple offers and negotiate them individually, but we'll talk about that in another video. When you have all of those offers in and everyone's given you the offers, what we hope your agent will do is break them out for you on a spreadsheet, because there's a couple ways you can think about the offer. Price is obviously a big consideration. Price is a little bit of an ego satisfier too. Price is about us being able to say to Bob next door, hey, I bought the house for $300 and now I'm selling it for $450, which is a pretty big jump. But price is just one aspect. Particularly in a busy market, you'll find that buyers will come out with these really high prices. And as we have seen in the current market that we're in, some of those deals don't go through because the buyer gets really excited and they make an offer that their lender can't follow through on. So the various data points that you should be viewing are price, whether it's cash or finance, what the closing terms are, and what any contingencies might be. So we already talked about price. The highest price may not be the best price. The highest price that you think that is supported by either proof of funds, if it's a cash deal, or a very, very solid lending package is a combination that you want to think about. So you could have, say you got an offer for $595 conventional loan and you got an offer for $600,000 VA loan. We're negotiating one right now on a multifamily home. And we got an offer that was higher than asking. It's a VA loan. And as part of the note, the buyer on that loan says, hey, and all the tenants can stay. Well, the reality is on a VA loan, if you're buying a multifamily home, you have to live in the property. So you want to evaluate that lending. That's a buyer that's really excited, right? They want to make it look as good to you as they possibly can. But that's in that scenario, the lending package won't match the price that's offered. Another way you might look at lending packages is if you've got a house that needs repairs and maybe you've got an offer that's similar, maybe you have two offers that are really similar in price, but one is a VA or an FHA loan and one is a conventional loan. The VA and FHA loans may require more repairs for you to do than the conventional loan. So it might be worth your while to take the slightly lower, if they're within maybe $2,000 or $3,000 or $5,000, take the lower offer with the stronger loan package. Maybe. That's just one way to look at it. Depends on your house. We're just talking about data points for you to consider. You might look at a cash offer is generally considered a stronger offer because it doesn't have to appraise unless the buyer in that unless the buyer who is making the cash offer says it has to appraise. And the reason for that is it is the bank on a loan that will order the appraisal. The buyer pays for the appraisal, but it's the bank that insists that that's done. So a cash buyer often will not require an appraisal. That makes that offer stronger. So you might have an offer that's $20,000 less, but it's removed a contingency for you. The other thing to think about is closing date. Do you have to be somewhere? Do you want to stay in your home longer? Do you have tenants in your home that have leases in place? Sometimes the closing date can make a big difference for you. If the offer's higher, but the closing date is going to force you out into renting something else, does what you're spending in rent offset the higher offer? So those are some things that you can think about when dealing with multiple offer scenarios. The biggest thing to remember is price is not the only indicator. Price is a big indicator, but don't let your ego get in the way. Go with the strongest offer and have your agent break this down for you in a way that's easy for you to look at across a broad spectrum. I hope that's helpful for you. I think it's awesome that you got multiple offers, and I hope you get it from contract to close with very little stress. Thanks for watching. If there's anything we can do to help, give us a call, 401-236-8685. Have a great day.